Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
Well, good day, everyone. I'm just very excited to be talking to Michael Koch. Michael has got a variety of things to talk about, including motorcycles and being a sprinter of a 400 and any number of different things. But we will start by just asking Michael to tell us how he got into the insurance business. And that's an interesting story in itself.
Yeah, well, Bruce, thank you so much for allowing me to share my nice little story that I have. Yeah, let's just kick it off. My insurance journey has been kind of interesting. My background was actually payroll and HR. That's where I came from. I started my journey in my hometown in good old Paychex, selling payroll services, and then very quickly I moved along to Wells Fargo. And during that period of time, I brought an HR solution to the bank, and really that's where my career took massive trajectory into outer space and helped me along a lot. I was helping businesses all over Southern California. I live in the San Fernando Valley, and you know, living in California doesn't matter what decade you live in. It's always more expensive here than it is everywhere else. I think, except for maybe Hawaii and or New York City, and where most people were having most of the problems was not paying for a payroll service. Most of them were having trouble having retention and getting a good, just consistent employee base. And so when I went to the bank, Wells Fargo didn't have the best payroll solution at the time, and they were competing against ADP and Paychex. So I
Mm.
aligned so the two biggest juggernauts, of course, in that industry. I went out and I aligned myself with a local HR company, and that local HR company was willing to. They said, as long as you brought them through your contacts through the bank, we will give your clients, your payroll clients, a great value and for the money that they're going to spend compared to the Paychex and ADP clients of the world. With that, it allowed me to be consistently 700% the goal, 600% the goal, 800% the goal
Wow.
for my entire duration in payroll. And then, I'm one of those that I like to keep challenging myself. And when the bank sold their payroll division off to ADP, I said, adios to payroll. And I started my journey into going into PEO. And that was really awesome. I learned a ton about the PEO industry and kind of that transition between payroll, PEO, and then insurance. When I went into insurance, I knew nothing about it, but I was referring quite a few insurance programs out here to some of the local brokers. And they said, Michael, if you were to do this same exact thing, you would make an absolute killing in insurance. And I said, sounds good to me. So I decided to rate it. I didn't know what I didn't know going into insurance. I had no idea what I didn't know. All I knew was that it was at the beginning of COVID, before COVID came. I had this brilliant idea to align myself with a local broker, and they said, "Great, you work here now. Go get your license." And I had no idea what that entailed, but I will tell you, getting that PNC license was probably the hardest test I have ever taken. And you may not know this stat, but the PNC exam in California, I don't know what happens in other states, but in California, I think they say it is a 75% fail rate for the first three times for most people
Whoa.
in California. Yeah, PNC exam.
Wow.
So, like everyone, took me three times to pass the stupid thing because I knew nothing. And by the way, there was no help. I had to learn all this on my own. So I went from payroll PEO into insurance, know nothing about it, got my license, and then I was off and running. And I've been doing insurance now for the last 4 years. Um, During that period of time, I've been able to create a few programs to beat the odds for a lot of clients during the renewal stage. Um, and that's how I've had a lot of success thus far. We created a program called the Pickle Program, and the acronym for that is Proactively Integrated Control of Loss. And I've been able to submit that somebody's renewal. And what it does is it shows the carrier and the underwriter and the client what they're doing from pictures, receipts, and activity throughout the year in regard to loss control. And when you submit that for a renewal, compared to what other brokers do, which is a lot of nothing a lot of the time throughout the year,
Right.
um, And, I've been able to get people's premium down 10, 15% a lot of the time, just by being able to show that proactive loss control the other 9 months. The downfall is I've gotten a lot of pushback from a lot of the old OG brokers that unfortunately expose a lot of what's wrong in the insurance industry.
So that's very interesting. So the pushback basically is coming because they don't want to show that things are being improved on a property.
So, you know, I've learned this over the last years that I've been in insurance. Most insurance deals are either done on a golf course or they're done over a dinner. And
Right.
unfortunately, historically, uh, when risk has been analyzed to get your buddy the good deal, you don't really necessarily show all the risk. And then something
Ah,
happens. Now, globally, this has gone on just in the industry as a whole. It's to get your buddy the
right,
good deal
right.
to lower the premium. Fortunately, catastrophes have gotten significantly worse over the last few years, and it's only getting faster. It's only getting worse. It's only becoming more frequent. The cost of those claims and those losses has gone up immensely, and that's not going to slow down. It's not going to get any better. And unfortunately, the old school regime, which is still, the majority, um, you ask a client, what does your broker do the other 9 months? And most people have no idea what their broker does. They just know their broker
They're
checks in.
they're doing nothing.
Then exactly, they don't know what they're doing. And then the broker, typically how it goes is the last 3 months before the renewal, your broker shows up. They tell you that they've gone to market. They take all your historical data that you've always given. You've had no claims. You've had no losses. Then on that last day before the renewal needs to happen, they say, "Hey, Bruce, you got to sign this because we got to get this locked in for next year." But you don't really know. You don't really know. And so I created a program so people knew, and it creates a lot more transparency. I get my clients actually on the phone telling their story to the carriers and underwriters, and you're able to actually see why. If you're going to raise somebody's premium, explain to them why. Let them know why. If it's going to raise, give them at least the satisfaction of knowing, hey, you know what? It's just because of this reason. I get you didn't have a loss or a claim, but this is where it's at. Just the industry wide, this is where it's at. But a lot of people don't even get that. They just get, hey, well, it's because of the industry. They're not actually told, hey, you could have fixed the roof on the building.
Right.
You could have that fleet of auto trucks that you have, that 50 fleet that you have. You could have taken pictures of all the tires and all the brakes that you redid. You could have shown receipts of all the work that was done on the vehicles to avoid any collisions. You could have shown those pictures. You could have shown that activity. You could have bought all new knee pads for the workers' comp. You could have bought all new non-slip shoes. You could have bought new mats for the building so nobody slips. And those things will reduce your premium because you're being proactive about the loss control. But most brokers aren't willing to do the work. So what I do is I've gone out with each one of my clients and I give them basically an Excel spreadsheet at the beginning of our relationship. And for the next 9 months, I'm going to be on the back end interacting with carriers that might be interested in your business. I'll start with maybe 50 carriers. And then as the year goes along, those 9 months are passing. Now it's going to get whittled down to maybe 20 carriers. And now it's going to get really specific. So when the renewal comes, now we're down to like 3 carriers that are really, really about the work you've been doing throughout the year. So at the end of the year, we submit all that data that you've been able to prove through receipts, activity, and pictures. We're going to take all your historical data because you've had no claims and no losses. Maybe you had one, but let's just say you've had none. And we're going to give that to the carrier. And then you're going to tell your story to the underwriter, the most senior underwriter. And that alone is what's going to bring your premium down because me and you collaboratively are going to do the work together and we can prove the work. And when I ask what your broker does the other 9 months, it's not typically that.
Well, so most property insurance people basically come in at the end of the year and they have you fill out this gigantic form and then you submit it to the insurance carriers and you get a premium back and off you go from there. And then of course the carrier asks you a bunch of questions about, this and that and so forth. So I guess my question is, how do you get the customer basically to stay current on filling out that form?
Well, it's by month. It's kind of a diagram. It's on the left-hand side and it's across the top, literally January to June. And I have all our policies that we're working on together, and they literally just check mark it as they go. And then as
Oh,
they're
I see.
getting receipts and as they're getting they're taking pictures, whatever it is, they're going to basically give me a file of all the stuff that they've done because they get an alert. Hey, have you checked your workers' comp? Did you do any additional training? And if you did that training, we're going to attach that to the file.
Oh, I
And
see.
that
You're
entire
very proactive about asking them
pickle,
about
the
these
pickle
things. Yeah.
program,
The pickle
proactive
program.
integrated control of loss. Yep, yep,
Wow.
yep.
So at
And
the end of the year, they've got this big complete file, and boom, it goes in,
it goes,
and
yep, yep.
the
And so
carriers all know.
the other part of it is too, most brokers are afraid of letting the client talk to the underwriter. If you ever
Ah,
look at insurance, it's kind of, when was the last time you ever talked to the most senior underwriter of your insurance? Probably never, right?
yeah,
And the
never.
reason the reason for that is because you need to look at insurance like a big triangle. And you ever notice how much gap there is between each one of those points in a triangle? There's a reason for that. The reason for that is because the broker doesn't want to lose out on the deal, and
Ah,
they don't want the client to say the wrong thing. So they keep you kind of they're kind of the buffer between that premium and the underwriter. And so as long as those two things never commingle, there should never be really a problem. Well, I look at it from a different perspective. I want you to go and talk to the most senior underwriter. I want them to tell your story. I can tell your story, but no one knows your business better than you. That's the truth, right? It's your baby. It's
for sure.
your time. You're there every day. I can claim I know everything there is, but the reality is you're in it every day. You have skin in the game. And who better to tell your story than yourself? And if I'm going to lose, 2% on the commission, I'm not going to make 12% or whatever, then so be it. The great part is that even if I took 8 or 10% commission, I'm going to save you so much money. I'm going to help you so much out that you're going to refer me 3 other clients.
Mm,
And that's typically how it works. And the reality is too, I ask this to clients all the time. Let's just say you have a broker for 12 months. There's 12% commission. Let's just say it's 12% because that's kind of general. 12% commission, 1% commission every single month. What does a broker do for 1% commission every single month? And that's typically what I want to hear from them. And once we get past that they don't really know. But that's been 30 years of 12% commission for your workers' comp, your GL, your property, your auto, your whatever it is that you have, your executive risk, your product liability. Imagine that. So imagine being able to cut that down and have a little more transparency. So yeah, I've gotten a lot of kickback from a lot of the bigger agencies, a lot of the old school brokers. Tell me to shut up and keep it quiet. But I don't think
you're like,
that's right. You know,
no. Well, I assume the insurance carriers like this.
Hmm. Insurance carriers love it. Clients love it. I love it because it's good. I like helping people. It's kind of I enjoy it in general. But the houses that the brokers work at, like myself, they're not such fans. They like the premium. They like that's how they live. That's how they keep
Yeah,
the doors open.
I mean, they're basically tactical sales. They're here's the policy, sign it. You know, don't
Yeah,
ask any questions.
yeah. And so here's the deal. Back in the day, and I've just, I think a lot of people they get stuck. You come up through an industry or whatever it is, and yeah, you go through and you learn certain ways of how to do things. But unfortunately, I think because I came from a different perspective, I came from the payroll merchant service, like a different world than insurance. I think that a lot of insurance brokers, old school brokers, are teaching or have always been taught to do this in a certain way. Back in the day, back in let's just say, back in the 50s to like the early 2010s,
Right.
2020, right? Whatever.
Yeah.
The way
Right.
insurance was sold, they would come to your business or your home. They would show up in their little suit. They would have their little folder with all their bag of stuff, and
Yeah.
they would tell you, "Cool, we're going to do this insurance policy. Give me 3 weeks. I'll be back, and I'll give you some options." Well, that's great, but at that time period of time, people didn't have access to information. They do
Right.
now,
Right.
and you know what I mean. And so there was there was this relationship that was built on trust, but unfortunately, the only person benefiting typically is the broker.
Mm, right. Right.
They're
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 getting their
selling you a
12%.
policy. I get the 12%. Whew, That's done. Gotta wait for another.
Yeah.
Hopefully they don't go out and build a relationship with another broker. And so, that's where I've come along, and I've helped a lot of folks out, a lot of national companies, a lot of large entities, and it's hard winning a 30-year relationship. And I tell people all the time that, even bad relationships are still relationships. People are in toxic relationships all the time, but they stay.
But they say,
And or what do they say? That it's better. It's better than the devil you know is better than the devil you don't.
oh, yeah, and that's so true. Well, okay, let me completely back up for a second. I want to know, so when you were at Wells Fargo, are you saying that you got them to start their own payroll program?
No, Wells Fargo has always had payroll. They would offer, like a business owner to walk in and write a check to do payroll for the week. They had another point. They had an option for a business to do ACH. And then they kind of formalized it in like 2010, maybe even before then. They always had it, but it was never
Okay.
like it was not operating like a paychecksy ADP type of
Ah,
scenario. And so
okay.
when I got there, it was there, right? They were kind of doing it that way. And where they kind of fumbled the ball a lot of the time was they didn't have an HR solution. Um, they didn't pay the bankers to really go and look for clients inside the branches. I always thought Wells Fargo
Oh,
had
I see.
they had a golden goose waiting. They could have destroyed Paychex or ADP. They just never capitalized on the,
Wow.
the payroll. They literally had access to all their business clients. Easy,
Right.
slam dunk.
Right.
And so when I got there, I found that I wasn't selling much trying to go head to head with Paychex or ADP, just on the payroll alone. So I went out and there was a group called the Holman Group right here in Chatsworth, and I knocked on their door and I said, "Hey, I've got this proposition. I've got, 6, 8, 20 million business clients that do banking at Wells Fargo, and a lot of them are business clients, and they have, sizable companies, and I'd like to go out and win some of this business." So then they gave me a pretty killer HR deal and said if they come through Wells Fargo, we'll give them basically the same white glove HR treatment, handbooks, posters,
Mm.
phone calls, everything,
Hmm.
training, for damn near a quarter the cost of what a Paychex or EDP would do.
Oh, wow. Oh,
And
wow.
uh, and then I started just chilling it because I was the only one doing it. And so
Right. Right.
and then eventually, a few years later, Wells Fargo allowed everyone to start selling the HR package. But
Oh,
initially, when I
wow.
brought that into Wells Fargo, I got my hand slapped. They were like, "What are you selling a non-Wells Fargo product? What are you doing?" And then because it was so successful, it had to go, of course, to the corporate, jargon, and make sure it was legit for the bank. And that's how I became really successful in payroll and HR.
Wow. Okay. So basically what I was trying to get at is that basically you saw a opportunity that kind of nobody else was looking at. And I think that's sort of the same thing you're doing with your pickle program. You see an opportunity that other insurance people are not even looking at and kind of bringing that into the fold.
Yeah, a lot of the younger brokers love it. They think it's really cool. Of course, the clients love it because they don't have to pay as much. It's just I get a lot of pushback. It's like pushing a big stone up a massive hill, and um, it's just I'm not. I would say probably because I'm not a big enough fish yet to really make a lot of. I got a lot of motion, but I will tell you, I get a lot of nasty emails from, I would say, top 5 broker firms around the US telling me like, "What are you doing? You're going to destroy this relationship that I have. I've had this client for 30 years. You're making me look bad. What do you mean I don't do anything?" And then I'll fire back literally, "What do you do? What are you doing
Yeah.
for the other
Hello.
client
What
the
are
other 9 months?
you?
What are you
Yeah.
doing?" And
Yeah.
so I don't care that I ruffle feathers. I've done it plenty of times, and the reality is when you do help, sometimes that's you're exposing things, you're exposing people, and you're exposing toxic, right? You're exposing
Yeah.
things that aren't
Yeah.
really working. And I've done the same thing in insurance. I've done the same thing with my wife's company, Merchant Payment Processing. A lot of the time, like I think I told you before we began talking, a lot of the time, people that insurance brokers don't understand credit card processing, and credit card processors, the people that sell merchant services to businesses, don't understand insurance. And a lot of the time, the sticker shock comes when a person with their insurance is like, what? Like premium went up 20% or 30% or whatever it is. But luckily, that's one time a year. And my wife, she owns her company called AAA Merchant. And same thing, she was at Wells Fargo for many years. And then she just got to a place that she had enough clients that were ready to do something different. And she had a lot of well-recognized national chain restaurants, fine dining, Michelin star, manufacturing, whatever it was, many. And so 5 years ago, she walked out the door, started her own company, and she's growing at Trifecta. And a lot of my insurance deals come from the collaboration. And for instance, like I'll give you an example. Somebody somebody gets their insurance premium raised by 20 grand, 30 grand,
Mm.
40 grand, 50 grand, whatever it is. That's a big chunk of money for most businesses, you know. My wife will come in and let's just say they own a manufacturing or a distribution company or an online sales company or a decent sized restaurant. That decent sized restaurant is spending, let's just say in credit card processing fees alone, Amex, Visa, MasterCard alone. They're with Fiserv, they're with First Data, they're with Heartland, whatever. They're at they're at 3.5% on the Amex or 3.8%. They're at 2.5% on the Visa, whatever. There's all these card fees. People can't really understand it. They just know that at the end of the day, when they look at their statement, they're spending 12, $14,000 a month, 20 grand a month, 50 grand a month a lot of the time. And she comes in, and she gets a wholesale rate because of the volume that she's grown the business to with the processors on the back end. And all of a sudden, the insurance premium isn't looking so bad. And so she'll come in and she'll save them what's let's just say minimum 20 grand a month times 12. It's a whole lot more savings than your $30,000 premium increase.
Yeah, right, right.
And so then
You're
all of a sudden it's not so bad.
yeah, yeah. So it's a tag team. You've got this tag team system.
Yeah, I mean, at the end of the day, people aren't looking for a sales rep or a salesperson. They're looking for someone that's consulting, that's like truly affecting the business. If I'm going to do business with you for the next 5 years, if you have a water main break, I should be able to know a guy or at least know somebody that I do business with that could potentially help you. And if you need cameras installed, I mean, I work in IT. I help with merchant and insurance. I should service as a solution, right? But a lot of people can't do that. They care about the sale and they're off to the next. And I'm just finding like after COVID, more and more people they wanted something that was a little more unique to them. They wanted something that was a little more special, a little more authentic. And so they weren't looking for the guy with, all the tools in the tool shed. They were just looking for one tool that could solve the problem that they have in that moment. And I feel like I've gotten myself to a place that I've ruffled enough feathers that and put myself in a good enough position that I can ruffle enough feathers and still get the job done.
So are you making this pickle program available to other people?
I help everyone. I do the same thing for every single one of my clients. It works for every one of them.
No, I mean other insurance brokers.
If they want to learn, I can teach them. The young ones are cool with it. The old ones that aren't such fans. I
Yeah.
have, as I've been working with the carriers and underwriters more, I'm finding that they are trying to get their customers to do that on their own more. And but the difference is they're
Mm.
using AI, they're using drones, they're using all these other things to get the actual analytical data that will show the actual risk analysis. Because
Ah,
that's the whole idea is to show the actual risk and to proactively show why you're not having claims. Like I always tell people, like most carriers, the reason why they give you insurance, the reason why they're in business is because they assume you're going to have a claim. That's the whole idea of insurance, right? Is the
right,
transfer of
right,
risk. And
right.
so if if you can, on my side as the broker side, if you can show the carriers underwriters why this business or why this person is not having claims and why they're not as risky as maybe they could look, and you show that consistency, that's how you're going to lower the premium. It's not by just doing the same old thing, just submitting old data from 3 years ago and showing, hey, we didn't have a claim this year. Why did you not have a claim? They want to know why. Like, so let's just say you had a claim. All of a sudden, you had a claim. Boom, done. Well, guess what? if you had a claim and you were able to show all these reasons why you weren't having a claim, and then the claim happens, well, it's a lot easier to be fixed. It's not going to take as much time because
Mm.
you've kind of snuffed out all the potential reasons why, and it'd be a whole lot easier to get to a solution if you've been doing all these proactive things.
Well, yeah, no, I can see where this is highly beneficial to the client because any time, I mean, it sounds like most insurance people, they've got this 30-year relationship that they build up and they just keep clicking it off every year. And then all of a sudden in year 18, something happens. And all of a sudden they're like kind of basically scrambling to go back and catch up on all the stuff that they never did.
That's right. Yep. Yep. And so with my program, it doesn't take 18 years. It takes like 9 months. And then we just get them on a plan and just keep doing the same thing. It doesn't take any more time. I mean, maybe a staple receipt here or there, but it doesn't take any more time because you can attach it to your Excel files. I mean, you're doing your daily grind anyway. And let's be honest, I mean, most business owners, they have people, a CFO, a CTO, a COO, they have these people in place so they can go and do whatever it is that they do. And so if you could, maybe put that piece of the work on your chief operating officer or your HR director, it's just another staple. It's just another receipt. It's just another thing that they'll add to the plate. But adding that to the plate is going to be a whole lot less costly than having nothing. And then a claim or loss happens. And then you're spending all this time trying to create a solution for it to not happen again.
You ever interact with property management software?
No, I haven't.
Yeah, well, we may have to talk about that anyway. Well, this has been fantastic conversation. I love it. Where can people find you, Michael?
Well, I've been using my merchant email quite a bit. So it's going to be info at AAA merchantservices.org. And then my cell phone is 747-300-7355. And I am easily findable on LinkedIn. I'm pretty much all over. I give all these weird little talks on LinkedIn and TikTok and Instagram. So just Google me. You'll find me. I'm easy.
Okay, well, go find Michael if you need some insurance information. Yeah, and maybe he can find a solution for you. It sounds like he certainly could. So I'm all for it.
Cool.
So great
Thank
to
you so
talk
much.
to you, Michael. We will talk
Thank you.
again soon.
I hope so.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.